Hello everyone, I'm William and this is Abraham for PropertySold.ca. And Abraham, big news in real estate this week. They've made some changes. What happened?
Yeah, as of Monday, Jim Flaherty, the finance minister, has come up with a few rules and guidelines in order to combat the housing bubble fears that we have in Canada. And you probably heard in the news the amount of household debt that Canadians are carrying.
Mm-hmm.
So these changes are pretty straightforward in what they expect from Canadians, and they expect that these are going to make some improvements in the economy. And the three changes that they've proposed are amortization. Anytime that you're putting less than 20% down, the government will limit the amount, the length of your amortization of your mortgage from 35 years to 30.
Mm-hmm.
So it's going to bring a few people out of the marketplace. You won't be able to afford as big a mortgage as you did before, but it'll also make sure that you're not paying up to double your mortgage in interest over the 35 years. You'll pay it off sooner. So that's the first one.
So that's going to help Canadians take on less debt.
Yeah, less debt and bring them in a better position in the future and pay off your mortgage sooner.
Excellent.
Yeah, the second one that they've come up with, the second idea they come up with is refinancing your mortgage. They've limited the amount of the loan to value, the percentage of the mortgage you can take based on the value of your home. So you used to be able to get up to 90% of your value in mortgage. Now it's reduced to 85%. The government doesn't want you withdrawing all the equity out of your home and spending it. They want to keep some money in there and put you in a better position in the future. So they've instituted that change as well.
So now 85% is the max, and it used to be 90. And the third change?
The third change comes with HELOCs. We did another video of that with regards to HELOCs, what they are and how they benefit you.
Home equity line of credits?
Home equity line of credits, thank you. Yeah, and the HELOCs, and what they've done is the government is no longer insuring them. So if you want to take a line of credit secured against your home, it's going to have to be 80% loan to value or lower. So there's no more home equity line of credits. They are no longer on the table. So yeah, when it comes to refinancing and when it comes to taking money out of your house, they're trying to limit that to put Canadians in a better position.
So before, the banks might not have to worry about defaults too much because that money was insured.
Yeah.
But now it's totally on the bank's shoulders if
the
the person can't pay it off. So hopefully they'll be more prudent in who they're lending money to.
Yeah, and they may change their guidelines as well and limit those numbers even further. We don't know, because when it's insured, the banks, as you said, have guarantees. When it's not insured, it's on their shoulders. They got to make sure they're doing the right thing. And these changes haven't come into effect yet. They've been announced today, but when it comes to the actual effect dates, when it comes to the amortization and the refinance guidelines, they're on March 18th, and the home equity line of credit, the HELOCs, they're coming into effect on April 18th. So if they're not in effect now, guys, if you need to do anything like a refinance or a HELOC or purchase a home with a longer amortization, make sure you get those approvals in now as soon as possible. Get it approved, because once it's approved, no matter when the closing date is, as long as you approve it before these dates we proposed, they should be honoring them.
And we're getting flooded with questions, and that's the number one question is, how do these changes affect me? And if I'm refinancing my home, how do they affect me and stuff like that? So we've got lots of questions, and we're going to address those in some more videos. So thank you very much.
Thank you, guys.
This is Abraham and William for PropertySold.ca.